Good morning. I'm Howard Penny, head of the consumables team here at Hedgeye, and welcome to our speaker series call. As a programming note, we're going to be hosting John Sandelman, CEO of Air Strategies, on January 6th. But getting to the current speaker, Todd Harrison is the founding partner and chief investment officer of CB1 Capital. Todd, we're very happy to have you here today. Thank you for joining us. I'll let you fill in a little bit more on your background, but looking forward to having a conversation about the cannabis industry in 2021 and maybe look back on 2021. But thank you again for joining us.
Oh, my pleasure. I'm a fan of what you guys are doing over here. So thanks for having me, Howard.
Awesome. So why don't you tell us how you got started in cannabis, or maybe if you want to talk a little bit more about your background on Wall Street and how that led you to the cannabis space, but that would be great.
Sure. Cliff Notes version, because there are better things to talk about. But 30 odd years on Wall Street, started at Morgan Stanley Equity Derivatives in 1991. Worked there for, I think, 6-7 years. Went over to Galleon in 97 to run derivatives there. Stayed there for just a couple of years. Moved over to Kramer Berkowitz, Jim Kramer. Ran trading, was a partner there for overlap with Jim for about a year. And it was during that time I fell into some writing at thestreet.com, which ultimately, after 9/11, migrated over to Minionville, which was a financial news and information platform that helped educate and inform investors. So did that for a number of years. It was during that time I started really deep diving into the cannabis space, as we call it, the rabbit hole for the intellectually curious. And I started studying the history, started studying the science, most importantly, and then the artificial arbitrages in the marketplace that are just now starting to come through. So I've been on this road for about 10 years.
Awesome. So 2020 didn't look like it was going to start out to be the perfect storm for the cannabis industry, but it ended up that way. So can we just break down those pieces of it? The election first.
It was really it was a triple Lindy 2020, a triple Lindy of positive catalysts for that perfect storm. I think coronavirus first and foremost really set the stage. Cannabis as an essential service circumvented a lot of the lockdown protocols in the spring. And that really shaped what was going to be, or shaped what turned out to be one of the more positive narratives for cannabis, and really largely stemming from the tax revenues and the job growth that's just going to create for society. We're talking about billions and billions of taxes for strapped municipalities and states, and we're talking about upwards of 1 million jobs with federal legalization in time versus the 300,000 odd that we have now, none of which is in the BLS. So all of this is going to be economically positive. Certainly coronavirus, between the jobs and the tax revenues, was the first piece there. The social justice initiatives, Black Lives Matter, that was the second tailwind, I think, in terms of unwinding a lot of the sordid history that this country has with the war on drugs. I think certainly, no one can debate that this has been weaponized as an immigration tool initially, and then ultimately for other purposes. So that's going to come undone, and that was the second tailwind. And the third tailwind, as you alluded to, was the election. Certainly the 5-state sweep left no doubt as to where the war on drugs stands. And that's what we're really focusing on, is the state level, that East Coast migration, that total addressable market increasing, as Boris Jordan likes to say. 80% of the U.S. population, once the East Coast dominoes fall, will be in cannabis-friendly states. And we look at the federal landscape as really the call option for the space, whether that's safe banking, or the repeal of 280E, or just an amended Cole memo even early in this administration, we think will be another tailwind. And then certainly closer to home, the AG, the Attorney General, I think will help shape policy. We got the HHS nominee already in place. So this should lead to a Cole memorandum that could make Jeff Sessions blush or something worse.
Yeah, I was, since you brought it up, I was going to get to that. But so there's been Boris Johnson talked about it, I think, the other day at one of these conferences about, a new Cole memo or an adjusted Cole memo or something like that. And then
Boris Johnson or Boris Jordan?
Boris Jordan, sorry.
Okay, so that would have been weird.
That would have been a typical one, right?
He's going to be talking about it too, mark my word. I think you're talking about
as a matter of fact, the UK is getting closer as well. but no, Boris Jordan, sorry. And then the new SPAC and Subversive Capital, he was very explicit in what he said, that he expected to be listed on the New York Exchange in the next 12 months, and that there would be a revised whole memo, shortly. I mean, in 2021, and probably in the first quarter or second quarter. So it almost sounds like they know who's going to be sitting in that seat, who the Attorney General is going to be to write that memo. I mean, am I reading that wrong, or how do I think about them being so explicit about this?
Well, I mean, listen, the X-Man, Xavier Becerra, who's the HHS guy now, the nominee now, he was the Attorney General of California. He's in support of the SAFE Act. He's obviously, as the AG of California, has some experience with legalized cannabis. But I think it's going to be Doug Jones. That's the whisper. That's the word. Last night the DJ saved my life. I don't know if the DJ Doug Jones is going to save the cannabis space, but certainly a much friendlier representative of the cannabis space will be in that office no matter what, but hopefully it'll be Doug Jones, we think, and then we're on our way. In terms of what it looks like at the federal level, we don't know. Like, a lot's going to depend on the Georgia runoff in January, which is a toss-up across, on both sides, from what I hear, if you believe that sort of stuff. But really, we're not as focused on that. Certainly that will help shape the slope of the change of the curve, but with or without a GOP Senate, and there's different schools of thought as to what is best for the current infrastructure of the MSOs. But we don't think, even if you get a Democratic sweep in Georgia, that you'll see the MORE Act. It'll probably be something more along the lines of a states plus, safe banking and protecting states' rights, which would be, nirvana for the current infrastructure of the MSOs. But we're not going to know that. But I think regardless of what happens, even if you get Mitch McConnell back in that seat for another couple of years, you're going to have a much friendlier environment. You're going to get safe banking. The incoming Senate banking chair, Toomey from Pennsylvania, has already signaled that he's in support of safe banking. That's because the American Bankers Association wants safe banking. They want the money, follow the money. That's what's going to drive that next step. And then our understanding is that that's going to get the ball rolling, turns cannabis from a matter of law into a matter of compliance. And that goes for lending and listing alike. So we don't know if the big banks will step in, but certainly some of the second and third tier banks will step in for lowering the cost of capital. I think it should be the minority owned banks. If there's any justice in the world, Carolyn, they should step in and get a piece of that pie. But safe banking will go a long way and start the ball rolling toward FinCEN guidance and listing on the exchanges. But to listen to Boris, the big boys, and we've been monitoring this at CB1 for some time, the barbarians at the gate, we've seen some slip through. We see Putnam, we saw some Wasatch ownership in the last 13Fs, and we'll see more this time around. But you're talking about the BlackRocks and the Wellingtons and the Putnams, writ large, and the Fidelities. We think they're going to bum rush this space, and when we do, we think that that growth, that value arbitrage we talk about a lot, is going to collapse.
Yeah, I think you're seeing, at least from my side, you're seeing more and more people that are doing the due diligence on the space, even though they can't, invest in the space yet. And the education is there. I've actually been pleasantly surprised as to how many people understand the industry to the degree they can today, which is nice. So let me just
yes and no, Howard. I think they understand the notion of cannabis as an end product. They think of smoking cannabis as sort of the industry. 1.0 was very much about the plant. That was Canadian cultivation. That was capacity, and that all happened up north, that boom and bust. And I lived on, mostly the backside of that, having launched CB1 in November of 2017. But nonetheless, that 1.0 boom and bust, when they flipped from, tell me to show me, was a pretty significant gut check. The global cannabis index dropped 92%. From, call it, January of 2018 to March of 2020, when we put in a cyclical bottom of this secular bull, in our opinion. 2.0 is really understanding that cannabis is an ingredient. It's an ingredient across a number of different end products and use cases that are, many of which are non-euphoric. So certainly, whether it's pet supplements or cosmetics and vanity or beverages or nutraceuticals, the idea of cannabis as an ingredient, whereas cannabis costs come in, margins improve because input costs are coming in, so margins are accretive. That is all in front of us, and that's going to really be triggered by this institutional migration that we've been anticipating, which will take us from sort of denial into migration. And then we think the panic to this trade, the FOMO, the real FOMO, arrives as 3.0 starts to come into focus on the horizon. And that's efficacy-driven solutions or medicine or biotech.
So the setup for 2021 looks good. If we don't get the clean sweep in Georgia in January, do the stocks sell off?
Maybe. We talked a lot about how fast money was betting on the election and smart money was focused on the fundamentals, and I think that's still the place. It's been elongated because of the runoff. So there has been a lot of fast money. As we came into earnings, I think most market participants, or at least anybody that's been following the cannabis space for some time, has come to expect there to be that post-earnings sell-off, right? As the insider windows open and so forth. That really didn't happen this time around after third quarter earnings, partially because of the MSOs ETF that we advise on, partially because of the institutional money that's starting to come in, the multiple disparities that we talk about, that growth add value multiples that we talk about a lot. So we really didn't see that, and we looked at, or we pointed at the time to, a couple of things: the UN vote, the MORE Act vote, both of which are now behind us, but certainly the AG, the Georgia runoff, and really the East Coast adoption narrative, New York, Pennsylvania, Rhode Island, Connecticut, Maryland, Virginia. This is all going to happen. That's going to continue to happen because the states need the money. People need the jobs. All these displaced industries, all those jobs have to be replaced, and cannabis is where it's going to be replaced if politicians get their head out of the grass.
And presumably, a number of the companies turning the corner on profitability and cash flow positive has a big impact on not.
Well, and thank you, because that really is the story. The fundamentals. We talked for the last couple of years how the back half of 2020, you'd see a lot of this operating leverage kick in, and these efficiencies at scale. And you're seeing that the hads, right, those top 5 or 6 guys, seemingly have turned that corner, despite all of these onerous conditions, despite these regulations and the choking of capital and the tax burdens and all that. Nonetheless, this pandemic and these regulations and just the environment has really forged some pretty snazzy operators across the space. So as these barriers fall, as these artificial impediments fall away, you're going to have some really fit management teams that know how to run a business lean and an even playing field. They're going to crush it. The fundamentals, coincide into all that perfect storm that we talked about. The real story here was the fundamentals finally turned the corner in the back half of 2020. And we're going to see that trend accelerate through 2021 and 2022 as some of these companies with subscale come up to scale.
We got a lot of questions for you prior to this call, but if anybody has a question, QA@hedgeye.com, feel free to send in a question and we can get it asked. So one of I'd say the number one question that we got is, how do you sift through the landscape of, let's just limit to the US companies, and how do you sift through the landscape to determine, what are your best ideas, or how do you focus, CB1's capital?
So I think, even looking top down, because we're a global fund, you look at where the best risk reward, the nearest term risk reward is. And, when we looked at the world, earlier in 2020, we looked at it and said, okay, well, you can buy into Canada for, the eventual globalization, or you could buy into the US for the eventual legalization / adoption at the state level. And we just thought the arbitrage at the US level, really was the best bet on the board, and still feel that way. So, we're mostly focused on the US. We have, we have one core Canadian position, that's Village Farms, which we think is just a mispriced piece of merchandise, and certainly today's news with the Aphria and Tilray should bode well for that stock. But mostly on the US. And looking at the US, looking at a bit of a tiered approach, because, we talked about those haves, those 4 or 5 companies that are going to do well no matter what. Those were, the companies that we thought had the highest margin of safety into the election. They're profitable. They are, they've got their expansions funded, and has the least amount of, we think, sort of market risk, given that cushion you have on the multiple side. As you go down the curve, though, as you go down the MSO, we call it the totem pole, and maybe if you go through those first 4 or 5 guys and you get into the second and third tier guys that maybe aren't as safe, they have more risk, but they also have more reward if we get safe banking, if we get a lower cost of capital, if they can access capital. And then remember, at the beginning of this year, it was really, this space was looking at existential risk. I mean, there was a scenario, and I'm, the most bullish guy I know in the space. There was a scenario where if you got a status quo election and the custodians went back into the woodwork like Pershing did last December, there was a chance that this could go away, and that's no longer a risk. The election and the states and the adoption, that's all demonstrated that. But you have a lot of companies that, as we like to say, you can hold your breath for 1 minute under 10 feet of water, but you can very rarely hold your breath for 10 minutes under a foot of water. And you're going on now for a couple of years under a foot of water for some of these companies on the second and third tier. So consolidation and or some sort of lower cost of capital, you'll see more beta with these second and third tier guys. They're more likely to go up 5x as opposed to maybe some of the top tier guys like Curaleaf or Green Thumb that maybe go up to, or maybe 3x based when these things open up.
Yeah. So the debate, or my debate I have myself, or maybe some people have, is with Trulieve being now a multi-state operator, but was profitable and didn't quite get the multiple as the multi-state operators. I mean, is that a fair? I mean, it's a fact, I guess, but it doesn't. I mean, I kind of like, Trulieve's approach to the business, where she really focus on profitability first and owning a market, as opposed to some of these other ones. No, well, just let me leave it at that. What do you think about that approach versus the others, and the discount multiple that they get versus, a Green Thumb or?
Well, they discount multiples, but they get the bang in their margins. So it stands to reason that as you start to expand the footprint, you'll see the margins come in, but you'll see the multiples probably re-rate a little bit higher. We like what Trulieve is doing. Florida, we happen to think, is the epicenter of cannabinoid wellness, with a 3.5 times national prescription average and the elderly population. And if you study the science, if you follow the science, you learn that as we age, the tone of our endocannabinoid system changes, and the cannabinoids found in cannabis supplement our body's natural processes. I've been hanging out with too many Canadians. So we think Florida is the market to be in, and they are the dominant player in that market. Obviously, they're going to expand that footprint, and we probably, given the unevenness in the landscape right now, there's a lot of M&A opportunities that will be accretive to margins. It just, it's going down that buy build pathway across the states with the limited licenses, and it looks like they're going to build that East Coast corridor. It's a big position for us. Mm-hmm. And it's breaking out above blue sky right now, or yes, still is.
Nice. And any tier 2 names that you talked about that might be on your radar screen, or something that looks good?
Well, I mean, listen, when you talk about some of the tiers, I think you ask anybody around the street, and they'll probably talk about Curaleaf, Green Thumb, Cresco, Trulieve, right? We would throw TerraSend. I think AYR is doing a lot of great things. 4 times 2022. EBITDA should be illegal in some states for AYR, but you have 90 plus RSI. So what do you do with that? You just sort of wait for the market to re-rate these things, which will happen with institutional adoption. Columbia Care, we think, is undervalued. They got a lot of good states coming on in 2022. Forefront, another name, and pulled back right to the neckline of that inverted Head and Shoulders. There are companies that, as you go down the line, Jushi, Harvest, we don't have a position in right now, but probably most leveraged to some sort of safe banking act. There's a handful. C21 is a name we advise on, and we're involved with, and you put that next to Planet 13, and your eyes will spin just in terms of the pairs trade there versus the same type of setup in terms of EBITDA. So there's a lot of listen. There's so much inefficiency in this market right now. I tell the story sometimes when I started at Morgan Stanley in the early 90s. Intel, Dell, Microsoft, Cisco, I forgot who started it, but one of them decided to sell hundreds of thousands of puts instead of buying stock in lieu of a stock buyback, tax advantages and so forth. And it worked great until the market took a dump. But we at Morgan Stanley started this business, and we would win the trades by 40 or 50 vols, which was just ludicrous. And then in a matter of, call it 6 months, we were winning or losing that business by a quarter of a penny. The market got efficient right quick when Wall Street stepped in. And the same thing is going to happen when Wall Street steps into cannabis. A lot of these easy trades, we would call them, these inefficiencies are going to correct right quick when Wall Street steps in.
Yeah. And I know we talked about prior to this call, you haven't done a lot of work in some of these SPACs, but actually got a bunch of questions on the SPAC about weed maps. Do you have any thoughts on that? Or I mean, it looks really expensive to me. I got to tell you.
Yeah, no, that same thing. It's still got the. I don't listen. I hate off the cuff comments. We don't have a position. I'm still wrapping my head around the SPAC game. AYR obviously, but nonetheless, they still got an outstanding investigation with weed maps. And over time, as people find the dispensary of their choice, they'll probably call on the dispensary as opposed to a service to get them their product. But I don't know how many people are thinking that far out ahead. But not a name for us. There are names out there that probably are doing real well that are under the radar. I don't think this is one of them.
Yes, I mean that you could say AYR is probably trading at a discount relative to what it's going to earn and what its opportunities are because it was a SPAC, frankly.
I think it's that, but until these acquisitions close, we see the same thing with Village Farms. We think Village Farms, same sort of deal. Since they bought out the JV on Pure Sun Farms, you're not seeing a lot of people who understand sort of the value there. Right, you're just getting a terrific company at a very cheap multiple that has terrific growth and a global footprint, and nobody's really educated to the opportunity enough because there's not enough eyes on the space. There's some, Raymond James, for instance, Beacon, for instance, they get it in Village, but still few and far between in terms of how people are viewing this space. And I still think a lot of people are looking at this and they say Vice. I see a lot of beer comparisons, a lot of cigarette comparisons. We think this is wellness. We actually trademarked. It's not about getting high, it's about getting well. We think that this is one of the biggest offsides perceptionally of all time. And as that 3.0 efficacious agility arrives and starts to demonstrate that this can help solve for some of these underlying medical conditions in time on the other side of these clinical trials, we think that entire golden sort of halo effect will benefit the consumer curve. And the late adopters who said, I'll never touch cannabis, I'll never invest in cannabis, this is the devil's weed. When they find out that this is more likely to solve for cancer than cause it, that whole demand curve is still on the horizon. So lots to be excited for. It's not going to be linear, but it's going to be exciting.
Well, I am of the age where I sadly have a number of friends who have certain cancers and are cancer survivors and are grateful to have that medicine, frankly.
Very misunderstood plant. It's terrible. I'd say it's terrible, but the opportunity that is presenting lucid and aware investors is generational. Always Early was talked about this, and I think on Twitter in 2012. Said that that the Great Depression ended the first prohibition, and our Great Depression will end the second prohibition. That was 8 years ago, and I don't know if this qualifies, but I think that the economic and employment needs created by this pandemic is a tailwind. The social justice is a tailwind. The elections are a tailwind. The will of the people are a tailwind. It's exciting.
So there's a lot of companies, I don't know if you can dig into this a little bit, but there's a lot of companies that talk about low cost finished goods production. How do we, if you hear someone say that, what does that mean to you? And how does, someone on the outside looking in understand that? I mean, we can see that maybe in beer and some of the other consumer product companies, but what does that mean to you, if you can maybe talk through that a little bit?
Yeah, what it means to me is Village Farms. I mean, this is a company that, has the lowest COGS, cost of goods, sold in, across the industry in Canada. And they told us a couple of years ago that this is where the market is going, and they're going to just, wait out their competition, because they're not going to be able to survive at these low price points. And sure enough, that's exactly what has taken place. And we look at Forefront as really that doppelganger, I don't know how to pronounce it, but as the mini village in the US, because they have that low cost production capabilities, and they have a really good footprint and SOPs out in Washington that we think will translate across, to Illinois and other states that they're in. So yeah, no, we don't think that the street really gets that yet. Otherwise, we think Village would be closer to 20 than 10. But we do think that is a viable strategy. Obviously, quality trumps cost, I think, to a degree, but if you can marry the two, and Village has something like a 16% market share at OCS, so not mutually exclusive. But these are the types of opportunities. These are the diamonds in the rough, if you will, that we think are going to continue to show themselves, at least until such time that the market becomes more efficient.
A couple more questions. How far along is the medical community in embracing the opportunity to improve patients' lives? How does it move the industry forward?
Slowly. The ECS, the endocannabinoid system, which is what regulates neurotransmissions in our body, sort of a big deal. Wasn't even discovered until 91, I think it was. I was graduating Syracuse University. Not a coincidence, probably. But think about that. This is the most ubiquitous network of receptors in the human body. Was never even taught in medical schools, and still in many medical schools is not taught. So Western medicine, which informs the stock market, is still very, dubious, I guess, of the medical claims surrounding the ECS. Obviously, Epidiolex with GW Pharmaceuticals cracked that, that veneer, so to speak, and there's going to be more behind them. But certainly, this is going to take time, and it's going to take clinical trials. That's, it's the only thing that is going to change the minds of the medical communities when the FDA embraces this through that clinical pathway. And we think that's going to happen more and more. As a matter of fact, if you go to the CB1CAP website and go to research, there's a button there that we created that shows the clinical research on the endocannabinoid system across a range of conditions. There's probably 40 plus conditions there that we think that this could help address. So as those clinical trials come through, one by one, there's going to come a point where that clap of thunder arrives, that point of recognition arrives, where people go, holy fuck, this is actually really good for you. This is actually something that helps benefit mankind. And by the way, this is the way it was for 30,000 years of cannabis, or 10,000 years of cannabis as medicine across societies, across cultures, across the world. The last 90 years has been the exception, not the rule. This has been the weaponization of cannabis by the US government, and they've ignored the signs that this could be something that's very helpful to society. So, I think that there is a criminal negligence, borderline criminal negligence by the US government, but
yeah, I think that's
what's forward and back.
It's coming to an end, I think. So I love this question. What is an undiscovered dead show I need to listen to?
I mean, Nassau Coliseum in the 1980s wasn't bad, but yeah, no, there's. Now you got me. I didn't think there was any question that I could really get stumped in, but this one's actually like a mothball, a moth in a light bulb factory. I don't know, but I'm just the fat man, that's for sure.
Awesome. Well, Todd, we're coming up on 30 minutes. I really appreciate it. Enjoyed the conversation. Hope we can do this again. And thanks for sharing your notes with me. I really appreciate hearing your points of view. So thank you for joining us.
My pleasure. And tell Keith I said what up.
I will. Talk to you soon. Thanks, Todd.